Yeah, I mean that is a very big challenge. You're spot on there. I mean, and I don't think it's for the lack of will. I think at least now, I mean, most banks really want to do things fast, but it's hard to be a bank. Fight for digital talent and all this regulation, and I mean, banks need to be conservative institutions in many ways and make sure that security, data privacy, basic IT, and the regulator is always changing things. So 80% of what banks do is just keeping their license and the regulator happy. So it's relatively small things they can do digitally. But in that space we operate, and yeah, I think it's aligning to their speed, influencing them in a positive way. But one of the challenges that for example, is when you launch a new solution or a new version of the digital bank with some of our solutions, often with 10% more effort, you would get maybe double the impact by doing a little bit of ongoing iteration. I think that's been sometimes frustrating to see. A bank spends a lot of energy implementing our solution, and I think it applies generally, not just to our solution, and then often they move on to the next thing without doing a little bit of further fine-tuning to really kind of multiply the impact. So more of an ongoing evolution mindset.
So Georg, great seeing you, great meeting you. Thank you for spending time with us today.
No, happy to be here.
Awesome. So let's just start. Tell us a little bit about who you are and what you do.
Yeah, so my name is Georg Ludvikson. I'm the CEO and co-founder of Meniga. Meniga is providing banks with building blocks for next generation digital banking to help make it more smart and personal, to help them drive sales and loyalty in digital banking. So we're an innovation partner to many of the leading banks in the world. We're also a Nordic company, but with a Silicon Valley mindset. We refer to ourselves as a mature startup at this stage, so we're not super early stage. We've been around for more than a decade, but so we're 130 people, 10 million ARR revenue euros, and so we are kind of an adolescent company.
Right. Okay, and tell us a little bit about Meniga. What is it that you do? What problem that you solve that banks couldn't do themselves?
No, I think I started Meniga more than 10 years ago because I'm deeply passionate about personal finance. I think that's one of the big topics of our world. It has so much to do with quality of life, how people manage their personal finances. Like if you have a rainy day fund when life hits you, that's a huge deal or not. And so many people unnecessarily, I think, don't do that well. So I started Meniga, built on the higher purpose that is still very much intact, to help people lead better financial lives. But one of the early decisions and observations were, I think these software solutions that I was kind of envisioned and have been building belong in digital banking. So basically, the founding vision, which is still intact with the banks, is that to stay relevant and close to their customers, the digital banks need to evolve from a place where you're just transacting, moving money, paying bills, checking your balance, into more of a smart financial advisor. And if you do that well, you can accomplish a win-win situation. Then the people will be better at managing their money. You're giving them more tools to be kind of manage the money better, and they will have higher quality or better financial fitness. You will also increase the loyalty with the bank, and you will create the feeling that my bank is helping me, and therefore you're in a better position to sell them and recommend the right products at the right time, as in a very much long-term kind of thinking. And I think that founding insight has never been more relevant than now, when people are not visiting branches anymore or not meeting people face to face. They have to move the advisory function inside the digital bank and make it a smart digital automatic advisor. So that's what we're helping them with, and we're very early days with that. I mean, most banks are still highly transactional, and so it's never been more exciting times ahead than right now.
Indeed. So if I understand correctly, you provide a solution to banks, and then banks delight their customers through your...
Yes, we're a B2B2C. The only exception is Iceland, where we started, where we have a B2C directly. We're a household name here, and have a personal finance app and website where people can manage their money. That's only for the purposes of testing our functionality and get direct feedback from the end users. But the business we're in is selling software to banks so that they add these things to their digital banking services. So we're B2B2C in that sense. And we power digital banks now that are used by more than 100 million people.
Whoa, okay, so that's impressive. Now, tell me, what do your customers say about Meniga, and what do your customers say about?
Yeah, very different things. I would say our customers, the banks, I mean, they would say that we are very good innovation partners. I think, and that's our ambition. And it's hard to partner with banks, but we try to help them, speed them up. We partner with banks that share our vision that the digital bank needs to become more of a smarter advisor, and that buy into that helps them win more long-term business and loyalty. And I think they would tell they've helped them create better digital banks, inspire loyalty, drive more sales, and generally they would be happy with our services. And same for their customers, I think, and that probably of everything that this on this journey, what gives me the most fulfillment and pride is when I hear about an end user, like the digital banking user, whether it's in Iceland or in Singapore or Indonesia or wherever that is, that has kind of tells us that they have improved their financial lives because of the solutions we provide through the digital bank. Like they have been able to save more or manage their cash flow or kind of improve that part of their lives. That's very. So generally, I think yes, we don't claim to help all these 100 million people that our software touches, but I mean I think that means a lot to us. We try to do good in the world in that way by improving the financial lives of the users.
Right. Okay. And then just now you mentioned that you help banks speed up.
Yeah.
My question to you is, what have been some of the main challenges that you found in partnering with banks that we know working at different speeds with different mindset? How have you navigated those challenges?
Yeah, I mean that is a very big challenge. You're spot on there. I mean, and I don't think it's for the lack of will. I think at least now, I mean, most banks really want to do things fast, but it's hard to be a bank. Fight for digital talent and all this regulation, and I mean, banks need to be conservative institutions in many ways and make sure that security, data privacy, basic IT, and the regulator is always changing things. So 80% of what banks do is just keeping their license and the regulator happy. So it's relatively small things they can do digitally. But in that space, we operate, and yeah, I think it's aligning to their speed, influencing them in a positive way. But one of the challenges that for example, is when you launch a new solution or a new version of the digital bank with some of our solutions, often with 10% more effort, you would get maybe double the impact by doing a little bit of ongoing iteration. I think that's been sometimes frustrating to see a bank spends a lot of energy implementing our solution, and I think it applies generally, not just to our solution, and then often they move on to the next thing without doing a little bit of further fine-tuning to really kind of multiply the impact. So more of an ongoing evolution mindset.
Right.
That's one challenge.
Now, you mentioned that you've been in the market for 10 years. I think it's safe to say that back then, digitalization was not a priority for banks. So how, on a personal point of view, how did you keep yourself motivated, knowing that you were early in the market with something that banks wouldn't necessarily know that they actually wanted?
Well, I would challenge that. I would say that 10 years ago, digitalization was a priority. I think it's been accelerated since, though. And in that time frame, I can see a lot of improvement. I think so. In that sense, we're not cynical. We see banks generally better in control of their data. They're more likely to be able to do these kinds of digitalization projects. Many have moved beyond some of the basics and getting the basic things digital, and now they're doing more interesting things. So I think it's happening. But there's been a lot of kind of changes on the way. I mean, the big Fintech wave that started maybe 5-6 years ago. I mean, now just the level of attention and investment from VCs, from the external environment into this is 10 or 20x what it was when we were starting. So just the focus is so much more. Right. Also, there's been the rise of the neobanks or the challengers banks, which in many ways have defined kind of what good looks like in digital banking for the past few years. So that has been a strong impetus for many of the incumbent banks to kind of pick up their game. So that has helped our business. We a bit in the business of helping them catch up and exceed to what the neobanks are doing. There's also the open banking movement, which is, or it's part of the open data movement, which basically means that banks are now have to give access to transactional and payment accounts to any company that has the permission of the user. Yep. So, and I think so. That's been a central question: how can banks, beyond just providing that access, how can they take advantage of that, offer that their users more of a holistic view of their finances, not just from the data or the business they do with them, but from other, and how can they use that to their advantage? So the open banking movement has been a big boost as well, and one of the core things we do with the banks we work with is to help them bridge those worlds. So we are not an open banking provider or connector, but we work higher up the stack, but we take the data from open banking and the bank's internal data, and we harmonize it, enrich it in a similar way so they can access it through the same APIs and build solutions, our solutions and others in their digital bank based on both their own data and open banking data. So you can think of our software as a middle layer between the core banking and on one hand and open banking data on the other hand, and then we enrich, add a lot of use cases and business logic there, and then the banks can build better digital banking with on top of that layer.
Right. Okay. Then I want to touch on a subject that we started hearing a lot about maybe 3-4 years ago, which is using data to hyper-personalize the customer experience. And of course, at that time, that was a trend and everyone was talking about it. Now, I mean, looking at your website, I came across the term ultra-personalize. So can you tell us a little bit what's the difference between a hyper-personalized experience and an ultra-personalized experience?
I don't think there's a difference. I think these are two words to describe the same thing. Right. But it has been an ongoing trend for a while, but I think it's still very much relevant. I mean, one of the heart of what maybe half of our R&D is spent on part of our product portfolio, which we call Insight Factory, which is basically about personalized insights. So using anything that happens in your financial life transactions to suggest something new and interesting to you. And it can be some product that the bank offers, but often it's just telling you about a trend in your spending or something you may be interested in. And that is a system that works on a very personalized level, and we have tools where banks can define segments down to one person. So I guess you can't get more personalized than to a one-person segment. So segment of one, ultra-personalization, hyper-personalization, I think these are terms to describe more or less the same thing. But again, most banks are still, and many services are not that personalized. You have the same interface and messages to the same people. You can go so much further if you really pay attention. And you think of it in banking, I mean, our spending tells us such a big story about our lives. You can tell your hobbies, your lifestyle, your kind of life stage. Are you getting married? Do you have kids? These are relatively easy to spot from your transactions. So, and again, the challenge for banks is do a good job without being creepy or invading your privacy to tell you something useful and interesting in a way that you and related maybe to the services and products they provide to, again, help you lead a better financial life in a way that feels right to you. And data is the key to that. That's it has to be personal.
Right, and presumably also anticipate what you might need from them based on the
yes, absolutely. I mean, and banks have been doing that for a long time. They have. And not much with Meniga, but like with taking data, trying to analyze what are if I have what is the next best action or next most likely thing that person will be interested in based on what we know about them. But I think what the missing piece is if making that really kind of, they typically don't relate it to the day-to-day spending. For example, if they want to give you an offer for let's say a green investment fund that they have reason to believe you might be interested in, maybe because you have a green car loan or something. And then, I mean, the best way to do that probably is when you just got your salary or if you have a surplus on your account. So you can connect when something happens in your financial life, when you spend, when you get paid, these are good kind of creating the conversation or a interaction with you at the right moment in a natural way inside the digital bank. So if you think about most digital banks today, they are organized just around actions. You're moving money, you're paying bills, you're looking at your statement. But I think the smarter banks now are moving to maybe make that half the real estate and the other half being personalized insights and trying to keep up a conversation with you in a natural way that feels right to you. Because when most digital banking users are surveyed, they complain, my bank doesn't know me, the offers are out of context. They should be able to do a better job based on the data they have about me, and it just feels not natural. So if you can do a good job of that, that's hugely beneficial for both the bank and the end user.
Absolutely, yeah. Now, you mentioned earlier that part of your role has been also helping banks accelerate in their digital transformation journeys. We are now seeing the emergence of an entirely new disruptive trend in financial services with Web3, with cryptocurrencies, tokenization, etc. So let's explore this area a little bit. But first, I'd like to ask you, from your interaction with banks, do you think that they have perhaps caught on with the discipline of adopting these new technologies and moving faster to market to anticipate changes that they might see coming?
Yeah, more than before. I think that they've accelerated in that, but I think it's a mixed bag. I think it varies based on technology. Of course, like the bigger banks, and we work with both incumbents, big banks and neobanks, but more with the incumbents. I think they are more systematically evaluating these things. I think generally what's happening in Fintech, and whether it's distributed finance or crypto or other things, I think they're paying more attention to what's happening. But we see, like, for example, I mean, one part of Web 3.0 is hyper-personalization, and using data and AI and machine learning to really think they're really embracing that. That's a huge topic with almost every bank we talk to. So they're investing a lot in that. When it comes to the other aspects, the distributed element, the blockchain, I think then it's more of a experimental projects and not at the heart of their digital bank. I think then the jury is very much out. Is there a need to have finance or all aspects of finance on the blockchain distributed way, or is that I think that's less obvious. So I think that's further beyond, but at least but the personalization aspect is using data for that purpose, that's now at the heart of what we see.
Right, and help me understand. So, from a bank's perspective, from a partner to banks, do you see Web3 as an emerging threat to the way that things have worked before, or is it something that enhancing it? Is it something that can coexist with the traditional banking model?
I think more coexist. I think it's all of this. It's a threat, it's an opportunity, but and usually. And that's something you've seen before, like when the neobanks first came, it's initially seen as a threat, but then you start seeing more examples of collaborations or banks acquiring startups and experimenting. And I think, but also this is early days. And one thing we see, but I think we will see more of, is we're seeing a breakup of the value chain of banking, meaning historically most banks, they are vertically completely integrated. They have all the products they offer, whether it's a mortgage or a savings product, on their own balance sheet, and they offer only their products in their branch and their digital bank. What we're now seeing is different strategies emerging. Some banks are opening up to, I don't only have to sell my products, I can invite Fintechs or other banks to sell their products inside digital banking. Why shouldn't I be able to shop my mortgage from different providers in my bank's app? For some banks, that's completely alien, that's letting the competition in. For others, I think it's an invitation to try a new strategy. You can, just like what happened in the telco business 20 years ago. Everyone was vertically integrated, then was deregulated. Now open banking is doing some of the same things. And then you have certainly some of the most valuable telcos today. They have no infrastructure. They have no cables or wireless towers. They only they just good at sales and marketing, and they buy access to the infrastructure as needed. I think that the same thing is happening, and then they're also some banks that are maybe moving towards not having a front end and just selling their services to APIs, being the best wholesale bank. So you don't have a lot of these examples, but this is starting to happen. So I think we will see an acceleration of that. So in that sense, all of these things will coexist. You mentioned DeFi, but I think also we have embedded finance, where the banks are saying, okay, people don't have to access our services just through our app or our website or brands, but we have an API where anyone can embed those things where it matters. I often take the example of like Uber or Amazon. If I'm in my bank app looking at my Uber transactions, why can't I see the route I went or the tip I paid right there? Why do I have to go back to the Uber transaction to do that? And vice versa. If I'm in my Uber app and I need to transfer funds, I should be able to do that if the bank has that service. So I think that we'll see more of that. The lines are blurring where you consume those services.
And we've all often heard that there's this protection towards owning the customer relationship. Do you think that's now in the world of APIs and embedded finance? Would you say that that's overrated, or what's your take on that?
No, I wouldn't. I think that's still where the power is. Like if you're the app where people go to for any decision that holds pricing power, then that's a very valuable thing. So if whether you're a bank or a startup, if you create a marketplace that becomes the place people go to, then that's very valuable. So no, I think that's what a lot of banks we work with are trying to do. They're trying to improve the loyalty. Most of them still have the privilege that the digital banking app is one of the 5 or 10 apps that people actually use very, very frequently. You could say in some ways they're squandering that opportunity by only making it a very narrow transactional finance app. Why not add additional service layers around that to expand that gradually and to offer more services, like, for example, all your transactions that there, why not help you optimize your subscriptions or find you discounts or help you become a smarter consumer? I mean, there's a lot of opportunity, a lot of things that are not core, but close to the cores that banks could add to their apps. Right. So that's one viable strategy, expand into more of a super app around banking. Okay, but we don't see that much yet.
Not yet. Now, tell me a little bit more. Tell me a little bit about this new functionality about the carbon footprint tracker. How does it work, and what need is it satisfying?
Yeah, so I think it's a topic we've been observing for a long time. It's one of the things that we feel that like really belongs in digital banking. I mean, people hear the word carbon footprint and everywhere, not just in the Nordics, not just in Europe, but the whole world. Like 2/3 of people think the environmental problems are one of the top problems of the world. So people are really concerned and want to do something about it. And they hear the word carbon footprint, but almost no one knows their own carbon footprint or where it comes from. There are calculators online, but that requires you to answer 50 questions and remember all your flights and how much you drive and so on. And that's like, people are just too busy to do that. It's too high of a friction to do that. But that's another thing, that because banks hold your transactions and almost all your carbon footprint from your activities comes from things you spend on, we can do a surprisingly accurate estimate of your carbon footprint based on your spending. It's not perfect, but nothing in this world is, but it's still like accurate to, let's say, 20 plus minus 20% based on even perfect data. Right. And that means like, so we offer now services with several banks, both here in Iceland, and we're going live with a major bank later this month in Europe, and we're also live in Portugal with a bank there called Moe, where we have core part of the online bank is they're asking their users, do you want us to estimate your carbon footprint? Yeah. And then if they say yes, so it's an opt-in thing, then we give you an estimate. We might say, hey, last month your footprint, we estimated it to be 800 kilos of CO2. And then you can, that's the first step, but that doesn't tell you much at first. Like, is that good or bad? Like, most people have no idea. Yeah. So we help kind of relate that to national and global averages and tell you where it comes from. Most of it typically comes from some kind of energy, like whether it's your housing or transport or flights, also a little bit from clothes and fuel and so on. And the carbon intensity varies a lot. So then We also tell you how you relate to others. Are you doing more or less than people around you with similar household size? And once you get a feel for it, it's a little bit like Fitbit. Like I have Fitbit now, and it gives me a surprisingly good feel for my resting heart rate and the steps I take after I wear it a while and see interesting statistics about it. Exactly the same with your carbon footprint. If you just see it there automatically, then you get a feel for it and you can start making changes. And you can either modify your lifestyle, and we have articles and best practice advice to help you do that, to reduce the footprint of your spending. But you can never go to zero. That's neither realistic nor desirable. We also facilitate making it super easy to offset your footprint with high quality offsetting projects that you can trust.
Right.
And again, the reason this belongs in digital banking is it's so convenient. It's fully automatic. It's one step away from the offsetting. So it reduces the threshold dramatically for people to do something about their footprint. And it's also good business for the banks. Banks are now in the business of funding the transition to green, which will take years and decades. And that's good business for them. In some cases, they're making better margins on green loans or green products. And part of that is helping their customers transition. So it belongs very well in digital banking.
Right. And in your view, what does banking look like in 2030?
That's a good question. I think we'll see much more of this marketplace thing where you have, I think it's probably at that point still dominated by apps, but two things, much more marketplace things like you can access all your data regardless of where you bank, and you will have more choice in those apps. I think also it will start evolving towards, instead of picking a bank, you're picking a smart advisor. So you're picking a system or you could call it a virtual AI-driven advisor that tries to optimize your financing for you. So it will be much smarter, and it will offer you ways to, even on autopilot, find the best deals at any given time, or switch your subscriptions, or and maybe a little bit further than that, you will choose your virtual assistants in different topics, including finance, and those assistants you will give them permission to choose the banking service providers behind that. I think that's probably what we'll see over time.
Right. Well, you paint a really exciting picture to look forward to.
Yeah, I think so. I think there's a lot of, virtual assistants can be so much smarter than we see today. Today's technology can be super impressive, and in 8 years' time it will be substantially more impressive. So yes, that's where we're headed.
So just to close, tell us, how will Meniga support this transition towards the vision that you've just painted for us?
Yeah, I think at the heart of our R&D and our mission statement has this, like, we are making digital banking smart and personal. So that's what we're working on, a smart assistant inside digital banking that helps you take better decisions for your finances. And that will continue to evolve. So we're at the middle of that evolution, doing our small thing.
Right. Well, that's great, and that definitely gives us something to look forward to.
Yeah.
So thank you so much for coming and spending time with us. And
my pleasure. Thanks for having me.
It's been great having you here.
Yeah.
Thanks very much.
Yeah.